so the first thing is how to analyze stocks before investing. So kind of like a friendly guide. This is one of the questions that we get often, and also this was one of the questions that I kind of got. So some people said they hadn't started the journey because they didn't know how to go about picking stocks. Now, some things are generic and some things are, I'm just going to tell you some of the things that kind of like worked for me as a person. So 10 steps. So we're going to be looking at 10 steps to analyzing stocks. So first of all, and this is one thing that people really take for granted, which is who's that person that I need to mute? Please, can you mute yourself, please? Okay, I think I found the person.
I think you are sharing your email.
Sorry?
I think you are sharing your email.
Okay, hold on. What can everybody else see? Let me stop sharing. Okay, so what can you guys see now?
For me, I'm still seeing your email.
What is everybody else seeing? This is strange. Wait, so stop share. Okay. And now?
Yes, I can see it.
Okay, so now. Okay, thanks. So there are 10 things to analyzing stocks. So first of all, is understanding the business, study kind of like their revenue and if they've been profitable over the last couple of years. Analyzing key ratios. Now, I've done a guide as well that kind of gives kind of like definitions around all of these things as well that we are also going to be sharing. Check the dividend history. So how often do they kind of like pay dividends, which is how long do they actually pay returns to their customers? When was the last time they actually paid dividends? Another thing is understanding industry trends. Now, a lot of people say they don't understand industry trends, but a lot of us actually understand industry trends more than we actually think we do, which goes back to number one, which is understanding the business. A lot of times when I work with people, I always tell people that you should kind of like invest in businesses that you are drawn towards, or businesses that you understand how they work, or businesses that you actually love. So for example, I normally would like to invest in financial services because I've worked a lot of my life in financial services. I also like to invest in kind of like the food sector because I believe whether we like it or not, everybody has to eat. So banking stocks, food stocks, pharmaceutical stocks are always my own first three to go to because they are industries that I kind of understand really well. And then review the management and leadership. This is now one that a lot of people kind of like take for granted. But if you've ever been following the market, the moment a CEO of a company steps out of line, their stock value would always fall, basically. And that's where understanding who is the leader of a particular company is actually very important when you're investing, because if you have a leader, especially in some countries, who's more likely to step out of line, sometimes it might not be a good stock to put your money in. Analyze your stock chart, understand the risk, and then build kind of like a stock analysis checklist. A checklist I've actually prepared for you guys, which we'll probably share after the class today. So what do I mean by to understand the business? So learn what the company does and how it makes money. Now, this is very important so that you don't go chasing trends. A lot of us, the problem is we actually do chase trends. So a lot of people now will be putting their money in AI stocks. As we know, the biggest AI company, chip company, is Nvidia, but they also so a lot of people will be putting their money in Nvidia, but there's also other things as well that is the backbone of AI, where people can actually put their money, where a lot of people are actually not putting their money. So, and which is what I mean by learn what the company does and how does the company make money. For example, initially, When we look at things like Tesla stocks, when Tesla first of all started and electric cars became a thing, even before one Tesla was made, people were putting their money in Tesla. Now, in places like Europe, you might not see a lot of Tesla cars, but when I went to America, I understood why Tesla stocks were actually expensive. Before you drive from a few meters in America, you would actually see a Tesla car. Now, if you don't do your research, you might not put your money in Tesla stock, which fair enough, right? But for somebody that is in America, they would gladly put their money in Tesla stock because they can see so many Tesla cars on the road. And which is where learning what the company does and how it makes money is actually very, very important, so that you're not putting your money in hype. Like a lot of people that put their money in Bitcoin at the time, and those that actually lost money in Bitcoin at the time. Review the company's products, services. So does the company have a product? What do the products do? Review the company's services. What kind of services do they offer? How competitive are they in the market? So for example, if a new entrant comes into the market, let's say within the drink industry, we all know that Coca-Cola, Pepsi, and a few others are the leaders now, and then a new company comes and their stock is launched. You need to begin to look at, okay, are they really going to grow as a company, or are they going to get kind of like priced out of the market sooner or later? So things like that is what you kind of then begin to look at, and then ask, is it a business that you understand? I always say it's very, very important before you put your money anywhere that you understand the business, and that is where research comes into play. A lot of the times, a lot of people that I talk to, the reason why they don't invest in stock is because they're lazy when it comes to doing research. Now, if you're going to start your stock journey, I would actually begin to Yahoo Finance should become your friend, and Bloomberg should become your friend. Everybody has access to phones these days, so going on Yahoo Finance, there's always a lot of information on Yahoo Finance. And then a lot of the apps as well, where I'm going to be advising you to actually buy your shares from, they actually put the company information on there. So you can kind of go and look at the past of the company, the current of the company, and what their future strategy is. And then you can do your research online. A lot of us spend a lot of our time on the internet and begin to, like, even ChatGPT, if you want to put your money in a business, if you're going to ChatGPT and ask ChatGPT to tell you everything he knows about that business, it would actually give you some information, and then you can kind of like start your research from there, basically. So the first thing is understand the business. Second thing is revenue. So look for consistent revenue over the last several years. For a lot of these companies that are on the apps where you want to start using to buy your stocks, there is always what we call their financial statements. On their financial statements, you can see how much revenue that they've made in the past couple of years. And then you can begin to check. And it's an easy check. So when you look at their what we call the financial statements, if you go and look at their income statement, you can see the revenue over the last couple of years. Is the revenue growing? But the most important thing is look at that profit line. Is their profit line growing? Because some companies, their revenue might be growing, but their losses might also be growing. However, even if their losses are growing, one of the things that you can actually do is speak to a financial analyst and understand why their losses are growing. Because some people, it might be strategic that they are loss making at that particular point in time because they're kind of like investing into their future, basically. So for example, we're all familiar with Amazon. Amazon was loss making for very, very many years, but that's because Amazon was investing into their future. And Amazon still has the potential to become one of the biggest companies in this world because of the amount of data, because of everything. They've built a whole ecosystem. So one of the places that every year I don't fail to put my money in, because I know that even if they lose money today, there is still a company that would grow over the next couple of years. So one of the places that I would always constantly buy stocks from is my Amazon stocks. Another similar company, even when we start talking about AI as well, I'm going to spend 5 or 10 minutes talking about AI. And for those of you that want to invest in AI, the kind of companies that you really should be putting your money into when it comes to AI as well, Microsoft will be one of it, because Microsoft is actually, in one sense of it, one of the biggest investors in OpenAI as well. So those are things that you need to begin to look at before you actually invest in stocks, in terms of, so for some companies, they might be loss making, but they're only loss making because they're investing in the future. Tesla is still loss making as of today, but as we know, electric cars is becoming a big thing, and it's going to get bigger, especially because we're trying to protect the environment. So unless Elon Musk does something that is really, really, I don't even know, Tesla stocks are going to continue to grow as well. Albeit now they have actually become really, really expensive. However, most of the apps that I'm going to be telling you about would give you the opportunity to actually begin to buy what we call fractional stock. So if a stock is, let's say, $450, you can actually put $2 in, and that would allow you to buy a fraction of the stock. So you still get to enjoy parts of the like the advantage of actually investing in those kind of stocks. So the third one I won't spend a lot of time on, which is kind of like the financial ratios. If and I think maybe subsequently we might do a session in reading how to read financial statements. If there are people that are really, really interested, if I get maybe 20 or 30 people who sends us the email that say they actually want to understand how to read financial statements when it comes to analyzing stock, we might decide to do a follow-up webinar. But you guys will have to reach out to Edna. If she gets 30 people and she says she gets 30 people, then we will actually do that. Now, when you look at your financial statements, when you go to the companies that you want to invest in on their website, there's a part on the website that is called Investor Relations. Under the Investor Relations, you can see their past financial statements. On their past financial statements, if you just, in short, I will teach you cheat codes. If you do Control F, which is Control Find, if to find, or Command F, depending on what kind of laptop you use, and type PE ratio, the PE ratio for that company will actually come out. The earnings per share, which is, so your EPS is called your earnings per share, which shows that how much do you earn when you actually own one share in that actual company. There's something that we call debt to equity, which shows how risky from a financial point of view. So does that company have a lot of debt, or do they have a lot of equity, which is, do they have a lot of their own money, or they're actually owing a lot of money? So a lot of times, if the amount of money that they owe is more than the amount of money that they actually own themselves, is it a safe bet or not a safe bet? Like I said, it also goes back to what their strategy is. So even when you're looking at these numbers, it's very, very important that you read the strategy part of the financial statements, and the financial statements are always available. Now, AI has made it very, very easy, right? If you download the financial statements and you put it into Claude or into ChatGPT and ask it to analyze the company because I want to buy stocks, Chat would give you a beginning of where to actually start from. And we need to begin to use the internet and all these tools that we have at our disposal, basically. So here, what I've done is explain what these key financial ratios are. In your free time, you can go through it. If you go on YouTube as well, there's always people that are explaining it in details. But if you have any questions as well, please feel free to send us an email or ask us on Instagram as well. And that would actually begin to help us to guide the kind of information that we begin to put out even on our Instagram page, because our goal is to empower everyone to be able to become very, very comfortable in their kind of like their investment journey. Now, the other thing, number 4, I said competitive advantage. So how strong is the brand? I've mentioned how strong Amazon is as a brand, how strong Microsoft is as a brand, how strong Tesla is as a brand, how strong Coca-Cola is as a brand. So those are brands that are very, very strong, that even though their stocks are really, really expensive at the moment, you can actually continue to put your money in. Things like Coca-Cola, they are one of the stocks that would always pay dividends from time past, from time immemorial. So those are the ones that, okay, if the brand is strong enough, you can put your money in. However, one of the key takeaways from today would be, rather than, because it's very difficult for people, especially as newbies, to begin to do that kind of work to like pick stocks, what I'm going to be telling a lot of people to do today is to invest in what we call ETFs. So ETFs is what an ETF does. The ETF has a pool of stocks, and then you can put it into a pool. So what you're doing is immediately you're diversifying your investment, basically, and you have a lot more opportunity to kind of not lose your money. Dividends, depending on if you're looking for stable or growing dividends, how has the company been paying dividends? when was the last time they paid dividends? If they haven't paid dividends in the last couple of years, still read it within their strategy. Why is it that they haven't paid dividends? Are they using their dividends to kind of like, so a lot of companies now are taking a decision not to pay dividends because they want to invest in AI, which is invest in their future growth. That is understandable. Industry trend, which is research if the industry is growing. So consider trends like AI, renewable energy, healthcare, and technology. So these are the ones that at the moment are growing industries, which for me is where you should really be looking to put your money, because they haven't reached maximum growth. They are normally very cheap or cheaper than the ones where there is no trend at the moment. However, there are also brands that are very stable. So the likes of your Coca-Cola that have been around for a very, very long time, they're always really like a safe bet. Management, we've talked about. If they have a CEO that is volatile, if they have a CEO that is tend to scandal, sometimes you might want to take a step back and say, do I really want to put my money there now? Because whether you like it or not, leadership always impacts how successful a company becomes. For lack of a better example, we've seen the impacts of having a bad leader in a lot of countries, and how that actually impacts the growth of a country. It is the same thing with the growth of a country. It is how it works even with companies as well. Stock chart, like I said, for most of the apps I'm going to be telling you to look at, there's always a stock chart. So you can just go in, look at the stock chart and see how it's actually been growing, and then decide if you want to put your money there. Risk, whether we like it or not, every investment carries risk. We all know that. So diversify across sectors, which is why ETFs are are more of a safe bet. And I always advise beginners to go for ETFs, because within ETFs, they've already done their diversification for you, basically. And then have a checklist. So your checklist is, do I understand the business? Is the revenue growing? Is the company profitable? Does it have manageable debt? And does the stock fit my long-term goals? So, example, companies, beginners research. I think I've already mentioned a few of them for those of you in Europe. But even if you're in Nigeria, which I know half of my audience are today, the apps that I recommend actually allows you to invest in most of these stocks. So Apple, Coca-Cola, Microsoft, Johnson & Johnson, Nvidia, Amazon. These are stocks that, as at today, you cannot go wrong with. Now, there are other options to Nvidia, which I'm going to be mentioning as well. So this is an example. If you're doing an analysis, so industry, Apple is in technology. Why do investors like it? Because it has a strong brand, it has loyal customers, it has a global demand. Revenue growth, there's always long-term revenue, profit growth. That's why they keep bringing out new products. That's why they're investing heavily in AI. That's why they're investing heavily in different kind of apps. And whether we like it or not, one of the reasons why Apple and Android, Samsung is always a safe bet is most of the games, most of the apps that are being built need those platforms really to work. So they're always going to make their money. And that's why they're a safe bet, no matter how expensive they are. And like I said, you could always buy a fraction of a share. And Apple is one of those companies that always pays dividends. So as a beginner, Apple is often considered a strong long-term growth company where you can actually put your money. Another one is Coca-Cola. Like I said, I like consumer goods because whether we like it or not, people must eat. So I'm always in favor of things that people use every day. Medicine, pharmaceutical, Coca-Cola, consumer goods, because people kind of like must eat. Healthcare, because whether we like it or not, people need to buy drugs. So why do investors like Coca-Cola? Global brand recognition, stable demand, consistent business performance for decades, known for consistently paying dividends. They have a strong cash flow and market presence. The only thing with Coca-Cola is actually really expensive, but like I said, you could buy a fraction of a stock. Now, even when you compare Coca-Cola and Apple, Apple is more volatile and Coca-Cola is actually more stable. So basically, if you're somebody that is going for growth, you want to see your portfolio grow, Apple might be your safest choice. But if you're somebody that wants to start making your money dividends almost immediately and you're not really concerned about growth, then Coca-Cola becomes your safest bet, basically. So, I put this in here as a cheat, like I said. Today, a lot of things that I'm going to be doing are things that you can walk away with today and basically begin to do. So when it comes to a portfolio strategy, what I always advise people is put 60% in growth stocks, 30% in dividend stocks, and 10% in ETFs or index funds. But we'll be going deeper into that today. And dividend stocks are things like consumer goods, utilities, of which Coca-Cola is one. And then your growth stocks, we've talked about things like technology. Microsoft is one, Apple is another one. And then we have AI, which is the things like NVIDIA as well. And I'll also be giving you a list of 10 other companies within the AI space, depending on what they do. But like I said, please also do your own research. Bonus tip, rule of 72. This is something that I live by, which is the rule of 72 really is how long does it take for you to double your investment? Because I get that question as well. How long, if I put in 10,000 naira today, or if I put 1,000 euro today, at what point would I get 2,000 euro? Or one point will my money become 2,000 naira? The truth about it is divide 72 by the growth rate, and that will give you how long that it will take your portfolio to double. So for example, if you are putting your money in something that has an 8% annual growth, and that's where you're going to leave your money, it will take 9 years for your money to double. If you're putting your money in maybe something that has like a 20% annual growth, which we barely see 20% annual growth unless it is a new stock into the market and something happens overnight, like what we saw during COVID, when all the companies that had the COVID vaccine all of a sudden had like 50%, 60% growth rate, then it would take you less. So if let's say your growth rate was not 8%, 80% was like 20%, 72 divided by 20 is about what, 3 point something, almost 4%. So almost 4, it take about 4 years for your portfolio to double. So it's just something for you to kind of like play around with, or something for you to kind of like know in terms of, okay, how long does it take my portfolio to double? For those of you that like doubling your money. Now, important reminder, and I'm going to put this out there: past performance does not guarantee future results, and always do your own research or consult a financial professional before investing. It is just something that I always put out there. So if you already start analyzing your stocks, you can start with these 10 steps for confident stock investment. And like I said, use the internet, use YouTube, use Yahoo Finance. Yahoo Finance gives a lot of information. All the apps that are out there now that encourages you to do stock as well actually has a lot of information that you can kind of like use to kind of like analyze your stock. So any questions before we move on to the next thing? If not, I'll take it that I'm a good teacher. Okay. This is where technology, I hope, does not fail me. Okay. So the next thing that we are going to look at, and I have a couple of, for those of you like Excel, let me start with my let's see. Okay, you see. Okay. Can anybody tell me what we can see?
Well, you can see your inbox.
I can see my inbox. Okay, this thing is going to keep happening. So let me stop share. And now, what can you see? Please tell me you can see beginner strategy.
Yeah, we can see the beginner strategy.
Yeah, cool. So before where we finished just the last time, I said portfolio allocation overview. I always like 60% growth stocks and ETFs, 30% dividend stocks and ETFs, and broad market ETFs. So basically, what is an ETF? Like I said, an ETF is like a accumulation of all the stocks within kind of like one bucket. So it's like saying I want a fruit basket. So within the fruit basket, you will have your apples, your pineapples, your mangoes, everything. So you have kind of like a full so you have like different fruits that you can kind of take from. What we were talking about before, when I started talking about Apple, if you want to buy Apple stocks or Microsoft stocks, is like, okay, I like banana. Banana is the only thing that I'm going to be eating, basically. But you know that if banana is the only fruit that you like, and I think my Dr. Tinu is online, she'll tell you that there are probably some nutrients that you are missing by only concentrating on eating one kind of fruit. So what an ETF is you kind of like an accumulation of different kind of stocks within one portfolio, and you can kind of like put your money in that portfolio. So that automatically gives you that whole diversification. And even if one, let's say Apple is not making money, but because in that basket you don't only have Apple, you have Microsoft. Microsoft is more likely to be making money unless there is an economic crash. You all of these companies would not be losing money at the same time, basically, is what it means. So popular growth stocks. So we would share, if you want, you can take notes, but we'll definitely share the slides to everyone who registered after the class. So popular growth stocks, for those of you, when you're going into the different kind of like apps, we have the Vanguard Growth, which is, and I've made it easy for you. So basically, when you go into the app, so if you are in Europe or the UK, things like Trading 212, things like the Euro apps, like even Revolut now, if you have Revolut as well. So those are a few that you can use. If you are in Nigeria, which I know some of you are from, we have Bamboo, we have I think CowryVest, and there's Trovo. And Trovo and Bamboo actually gives you an opportunity to invest in stocks abroad as well. So that means that you are also not only investing in Naira, but you're also investing in foreign currency. So when you go to any of those apps, you can just quickly type in VUG, which is Vanguard. Vanguard is one that I kind of like swear by. Invesco as well. So Invesco QQQ has a lot of AI and tech exposure. If you want, iShares Russell is US companies within the US as well. It has a lot of growth companies as well. And then you have the Invest Innovation. Now, innovation is very, very high risk. Anything that has innovation, they are more like people are trying to innovate, trying to do something new. It's always a high risk. However, with innovation stock, if you get the right one, those are the ones that are more likely for you to have a higher return on your investment, basically. However, it carries one of the highest risks as well. So you might want to be a little bit careful with that. And then we have what we call the SCHD as well, which has a strong long-term potential. So I know I was going to get some people ask me, so what are kind of like the growth stocks that we can put our money in? These are a few of them. For me, the Vanguard growth one is always, it's one of the ones that I particularly like, to be honest. So what is within Vanguard most of the time? They're the ones that we've been talking about: Apple, Microsoft, Nvidia, Amazon. So if you buy an ETF, which is the VUG, you actually get the opportunity to invest in all of these companies because they're actually the fruits within that bucket. So why do beginners like it? Most of the time, it's diversified across major growth stocks. It's lower risk than buying just the single stocks. It's low management fees, and then it has a long-term growth history. But always remember that past history might not really be an indication of the future. But as we know, it will take a long time for Apple, Microsoft, or Amazon to go anywhere. Nvidia, with the growth of AI, there's still, okay, where is AI going? But as we know, AI is here to stay. For me, AI is like when the internet first of all came out as well. We would eventually get to a place where, obviously there's a lot of hype around AI now, but we eventually get to the point where it becomes where there's stability, but at that point, Nvidia would reach a peak. So if you're going to invest in Nvidia and AI is going to be around for a very long time, this is kind of like the best time to get in there. We talked about Invesco QQQ. They track kind of like the largest non-financial companies on the Nasdaq exchange. So, but they have strong exposure to AI, technology, innovation, and cloud computing. The only thing is they're very volatile. But looking at their history, they also show strong growth potential. But I'll be saying put less money in there. So if you are a conservative beginner, where a lot of us might be, is put 70% into S&P 500. So S&P 500 is kind of like the same like your VUG as well, and then put 30% in growth. So S&P 500 is the most stable ETF that is out there over the last 20 years, and I have a spreadsheet somewhere which I'm actually going to show after this. You can see how much it has grown. It grows every year. The only year that maybe the S&P 500 hasn't grown might be during the world financial crash, which it lost about 18%. But overall, it is one that always grows. Now, the problem with S&P 500 is, on average, you're looking at an 8% growth yearly at the low end, and if you're lucky at the high end, it goes up to 18%. So if you're looking for a safe bet, even though your return is only going to be about 8% in the year, which is what has been on average the lowest over the last 20 years, S&P 500 is where you need to start. Now you can split it, put 70% in S&P 500, 30% in growth, 50% in S&P 500, 50% in growth, 70% in growth, and then 30% in dividends. Now, I'm going to say this and add a caveat. If you're still very young, maybe between your 20s and your 30s, really and truly, because the thing about investment is time plays like a lot in it. This is where you really should be putting your money. However, it's still up to you. If you're in your 40s, getting closer to retirement, maybe breaking at moderate growth. But if you're already very, very close to retirement, please be conservative with your money. Because sometimes, as much as we say these things, there are unforeseen circumstances that happened. Like the Iran war that happened. Nobody saw the Iran war coming, but it actually happened, and it's had an impact on the global economy, whether we like it or not. So if you're closer to retirement, we always advise that you kind of like play safe. So popular dividend stocks, like I said, today is all about giving you guys expo that you can run with. Is still, so these are stocks that every month or every quarter, every whatever, they would actually pay out dividends. These are them. So these are some of the popular ones that you can kind of put your money in, because they always pay out dividends basically. And here I've kind of like done a table on the strengths of each of them and kind of like their past history and where their future growth is. So you can look at these ones and see, okay, where do I really want to put my money, if at all, if I want to put my money. Now, your beginner's favorite, for those of us that are just starting our journey, this is where to start. Because in these ones, what you have is you have the likes of Coca-Cola, Pepsi. These are brands that have been around since before some of us, our grandparents were even born. Cisco is very, very stable. Home Depot are very, very stable. So within this whole portfolio, you have companies like this, so which makes it where you can, a safe bet for you to actually put your money, basically. Now, we've talked a lot about Vanguard. It's the one that will keep coming up whoever you speak to, because it is the one that a lot. And then you have Johnson & Johnson, which is very, very big on the pharmaceutical side. ExxonMobil, when you talk about oil, and then JP Morgan Chase, which is one of the very, very steady financial companies as well. So Vanguard high dividend yield, and it pays dividends at all times. So it's something that you might want to put your money in, basically. So what's the difference between a growth ETF and a dividend ETF? The difference between always a growth stock and a dividend stock is, if you're looking at appreciation where I'm investing now because in the future I want to sell my stocks when they've actually increased in value, and I'm not really concerned about getting dividends right now. You should be looking more at growth. But if you're one person that you're like, okay, I want to invest my money, but I also want to be getting monthly passive income from my investment, then income generation is your focus, where you want to be getting passive income, then this is where you need to put your money. Now, if you're a passive income person and you want to be getting passive income, to be honest, you need to put a lot more money. So how you work it is, if on average, when you look at the portfolio that you want to put your money into, they pay, let's say in dividends, let's say 10% every month or every quarter, and you're like, oh, I want to be getting €1,000 every month. That means on average you should be putting €10,000. You should have at least €10,000 in that income generation stock for you to get €1,000 every month. That's if income generation is actually what you're looking at, basically. So if you're an income generation person, you need to work out, you need to have a goal. How much do I want to be getting quarterly or monthly? And then work backwards, so that when you're doing your analysis of where you want to put your money, you can look at and say, okay, over the last couple of years, what companies have paid dividends, what percentage of dividend have they paid? And because I want to make a certain income every month from my stock portfolio, this is where I need to put my money, but this is also how much I need to put into it. So if, for example, that ETF has paid 10% over the last couple of years every month, you'll be saying, and I want to make maybe €100 every month, then you have to put at least €1,000. If your goal is to make €1,000 every month, then you know that you have to put €10,000 in it, based on, but then you also need to look at how much percentage of dividends that it actually pays out. So that's kind of like the way to kind of like work it out. I hope that makes sense. So recommended beginning portfolio, like I said, VUG, VOO, SCHD, high yield, VYM, so which is your Vanguard. For me, Vanguard and S&P 500, they're always for beginners. This is where you need to start. And then the Schwab and also the Vanguard high dividend, basically. So any questions? I feel like I'm talking to myself this night. So any questions? I'm going to pause for a few minutes. I'm going to stop sharing. Okay. All right. So because of my Nigerian people, let's switch it up a little bit and let's look at a few Nigerian stock. Let me see. So okay, let's look at a few Nigerian stocks over the last couple of years. In short, is Edna that is going to be doing this sharing for me next time we have this class, because my MacBook. Okay, please tell me you can see the top Nigerian stocks over the last couple of years.
Yes.
Yeah, I got it right this time around.
Yes, we can.
Okay, so over the last couple of years, the biggest winners in Nigeria has been Presco, which is in the agric sector, Okumo Oil Palm Oil, which is also in the agric sector, Nestle Nigeria, as we all know, Boa Cement, and Dangote Sugar. Now, for me, even though this is what I haven't done my research, right? These are the ones that have over the last couple of years. The safe bets over the last few years that I've personally invested in Nigeria have been the banking shares and also the technology shares. Over the last, when did MTN did an IPO a few years back? I can't remember when. I think 2-3 years ago, if I remember correctly. And that's another thing, guys. If you're really going to go on this investment journey, you need to begin to surround yourself with people that can give you kind of like the right information, which is your network needs to change. And also, even when information comes your way, you need to take it. So for example, yesterday, whether we like it or not, or 2 days ago, there was speculation going on across all social media, Instagram, Facebook, Gistlover, Niger, whatever, and stuff like that, talking about how the fact that Dangote is getting ready to do an IPO, right? The same way gossip goes around is the same way this information kind of like goes around. But a lot of times it is about what you do with that information. When MTN was going to we're going to raise a couple of years ago, it was the same way it was circulating over the internet. I think this was 3-4 years ago, but MTN shares have grown by 380% within that period. Last year, was it last year's summer? Because all the banks knew that CBN was going to ask them to increase their capitalization, they all did a raise last year. And there was no kind of like cap on how much you can put in. Between last year and this year, those bank shares have actually increased by 140 or 150%. GTB has definitely increased by 150%. And GTB made it so easy that if you were banking with GTB on their app, once you log into GTB, it would ask you, do you want to invest in GT shares? So you didn't even have to fill any form or anything. You just need to do it on your GT app and basically invest in shares. And it didn't matter how small, 500 naira, 1000 naira, whatever, they were taking it. Basically. But a lot of us, when we see these things, and another thing about investing as well, as much as part of it is information, and another part of it is mindset and what we do with the information that comes around us. And for some of us, we also think that, I know a lot of us feel that, we need big money to do this investment. No, you actually don't need big money. Because GT was selling to anybody and everybody, then it didn't matter how much you had at the time. I know people that only put 1,000 naira in. I know people that put 20,000 naira in. I know people that put 30,000 naira in. And to be honest with a lot of us, no matter how much money that we say we do not have, in a year, people still buy Asoebi, even if it's only 20,000 naira that you spent on Asoebi in that year, or 30,000 naira in Asoebi on that year. Rather than use that 30,000 naira to buy Asoebi, use it to buy shares, no matter how small that it is. I always say to people here, it is your odd McDonald's money, your odd takeaway money that we're spending on buying takeaway and stuff like that, that you can begin to put into most of these investments. If you start small a lot of times and you put in money that you can afford to lose. When I started my journey, I used to put the odd 50 euro, the odd 100 euro in a month, that I know that, okay, in a month, that 100 euro, what is going to cost me is that, okay, you're not eating out for this whole month. But then as I saw it grow, I began to build my confidence to put a lot more money into it. And then I changed my mindset, saying, okay, you know what happened? You know the worst that will happen? I'm not going to buy, if I was going to buy 4 new pairs of shoes this year, I'm only going to buy 2. The rest of that money is going to go into shares. So I'll see it as, you know what, even if I lose that money, it was a pair of shoes that I lost. So there's something that you can do about your mindset and begin to shift your mindset and begin to, like, how do I actually see things, basically? There have been times that I've made a decision that, you know what, this year, I'm not even going to go on holiday. I'm just going to invest my whole holiday money, basically. Now, if I lose that money, what was my opportunity cost that I should have gone on holiday and kind of like spent all that money? Really and truly, it doesn't really cost me sleepless nights like that. So it's about shifting your mindset around, you know what, some things are wants. Instead of spending all my wants money, even sometimes some of your needs money, because there's some needs money as well that you can kind of like get rid of. Let me begin to use that money to begin to invest, no matter how small it is. And I can assure you that once that money begins to grow, you begin to build your confidence, really. I saw a lot of questions saying, oh, I'm scared of losing my money. The truth about it is, if you're spending money on things like, okay, maybe buying a new pair of shoes, or buying a new bag, or buying that new belt, or buying that Asoebi, the truth about it is that it is not actually doing you anything. So it's basically the same thing as actually losing money. So if you can do those things, maybe begin to use that money to begin to build your future, invest into your future. If you lose it, fine. But what if you gain as well? One thing I find with human beings, and I say this to my children all the time, is society has so much conditioned us that in everything in life, especially when it comes to risk taking, we always think about the negative first before we think about the positive. We always think, what if we lose? But what if you win? rather than start asking yourself that question, what if you lose? Because I saw a lot of that in the comments and what people said. What about what if you win? So in Nigeria, these have kind of like been like the biggest winners over the last couple of years. However, there are some that you can put your money in. Banking shares are always a very, very good place to put your money. Telco shares are always a very good place to put your money. Food places like Dangote, Bua Cement and Dangote Cement, because whether we like it or not, in places like Nigeria, we're always building houses. So consistently, Dangote shares are always a good place to put your money. And you don't need a lot of money to do it with a lot of the apps that are out there these days. Technology has made life so much easier that if we're not careful, we're only consuming technology as a consumer rather than as a producer. Begin to look at your phone, your laptop as a way for you to begin to invest in your future, rather as something that you're just using to consume things that are not really adding value to your life. Laughter is good, entertainment is good, but at the same time, we need to be careful that all our life is not about laughter and all about entertainment. What about the future? So other strong performers I've put here is Bua Cement, Dangote, Cadbury, then the banks, Wema Bank, NGX Group, Vitafoam Nigeria, Fitson Healthcare. Healthcare is always the place to put your money. So if you're looking for places to put your money in Nigeria, start thinking agriculture, think banking, consumer goods, because we know in Nigeria we like our food, cement and industrials, and also healthcare, basically. So the biggest long-term winners have these characteristics: real earnings growth year on year. Places like Dangote and everything is cash and carry. Anyway, a lot of businesses in Nigeria are cash and carry. Businesses with inflation pricing power, whether we like it or not, no matter how expensive food gets, no matter how expensive cement gets, people are still going to buy because we still need to live somewhere, we still need to eat, and we still need to use medicine. And then consumer sectors with stable demand, basically. Agric is the future, but when you're investing money in agric, please do your due diligence. Only invest in agri companies that are listed on the stock exchange, and also look at the ones that have been there for a very, very long time, because there's so many agro companies that keep on popping up, here today, not there tomorrow. And like I always say, if it's too good to be true, then it's definitely too good to be true. So if you're starting your journey today and you want to buy Nigerian shares, what I would recommend: GTCO, Zenith Bank, Wema Bank, the ones that have been paying dividends consistently, MTN, Nestle Nigeria. I have friends that we did the MTN together those years. We also did the banking together as well those years. Last month, all of them were smiling because their dividends were being paid. Basically, for the MTN one, some people have already made back the money that they used to buy the shares in dividends already. So everything now that they're getting after that, it's basically just interest and income. So even if MTN shares were to go down tomorrow, they've already made their money. They don't really care because they've already gotten their money back. So your key takeaways: agricultural stocks. They deliver the highest returns due to commodity cycles. But when it comes to agro stocks, please be really, really careful. The new entrants to the market, I'll be saying wait and see. Consumer goods, Nestle has been around for a very, very long time, so it's always a good place to put your money. Banking, as you all know, steady growth, dividends, a lot of times as well. Big banks like Zenith, GTCO, Wema, Access, that have been around for a very long time, are more likely not to shut down. Even if they have problems, they will always find somebody that will buy them, basically. And then yeah, and make sure, as I say, diversify. Yeah. So any questions before we move on?
I have a question.
Go on.
Okay, so thank you so much. I'm really enjoying this class. I'm one of those that bought the MTN shares. Thank you for inviting me then. And to be sincere, the shares have increased over 800%. I think I bought about 900 and something thousand then, and it's worth almost 4 million now.
Yep, because I checked. Yeah, I checked the distance. Yeah. So what's your question?
Will I sell some of it and use the money to buy another share?
Yeah, you can.
Or should I just leave it to?
Yeah, you can. Like, so for me as well, right? One of the things is that when it comes to invest, when it comes to investment as well. So you can decide to because obviously, like you said, you invested 900, and thanks for being open, you invested 900, right? Now the shares are what 4 million. Do you understand? You know what some people do? They will quickly take out their 900. Do you understand? Because whether you like it or not, that 3.1, do you understand, is now money that you've gained, and you've also been paid dividends, because you've not even, do you understand what I mean? So what some people do is, okay, you know what, I will feel more comfortable by saying, okay, the 900 that I invested, I already have my money back, so whatever happens after this, I don't even care. Do you understand? So for me, I'll be saying that you can sell and then use that money to diversify and do something else. Does that make sense?
Yes, thank you.
And I know we talked about the fact that, okay, with the Dangote IPO coming on and stuff like that and everything, I think I intend to sell some of my MTN and GTCO at that particular point in time, and then use them, and then use them, and use them. I mean, yeah, exactly. So which is my plan basically at that point in time. So that's another thing, and that is where I was talking about. Do you want to build a portfolio because you want to start getting income every month, or you want it to grow? If you allow it to grow, then you can kind of use that money to do kind of like something else. I've had stocks before where after they grew, if I think, okay, you know what, they're not going to grow beyond that, or I need money, I'll sell them and then invest them in a different business, or kind of like use them to do something else. I've sold stocks before to pay children's school fees. I've sold stocks before to buy a car. I've sold stocks before to kind of like invest in another business. But that's why they're there. Do you understand? So it's not like when you buy them, you can't sell them. You can also make a decision to kind of like sell them later on to actually do something else if you need to. Do you understand? I've also had friends that will sell their stocks because they want to go on a very expensive holiday when they're a landmark birthday. I have a friend, she invests and tell you that, well, this is my what does she call it now, my designer bag fund, and then she will keep investing, and then when she gets to that point, she will sell them and use it to buy the bag. Do you understand? So there are different reasons why people do these investments. It doesn't mean that once you buy it, you can't sell it. You can always sell it. And then some people keep it for the future. When my father died in December 2024, all his stocks, all his banking stocks, everything is there. You know, I think maybe we should sell it and split the money. The reason we couldn't close down his GTP account, that's where his dividend is going to. So they told us that if we close it down, then we need to provide another account where his dividends can actually go into, because my father invested heavily in stocks as well. So, and that's another thing, you can leave stocks to your children as well. So you need to think about the future of your children as well when you're kind of like making these decisions as well. My mom was someone that invested heavily in stocks, but when two of my brothers wanted to go abroad to study, she sold those stocks to actually fund their education. So it's not like when you buy them, the point is, it just gives you a way to invest for the future, basically. Okay. So to the fun part. Since nobody else has any questions.
We have a question from the chat section.
Okay, what does it say?
So Busola is asking, how do we know when we earn more?
How do you know when you earn more? So for a lot of the, so is she talking about how do you know when you earn more, in what sense? Let me see if she can. How do we know when we earn more? Are you saying how do you know when the stock increases in value? Is that the question? Is Busola online? Let me see what she's saying. Yes, when increase value. So for a lot of the apps actually shows you has the stock increases in value. So it will show you. So I don't know where your situation is. So with Nigeria, there's something called Invest Nigeria app. When you go on Invest Nigeria, it will show you what the value of the stock is now, and a lot of times you know how much you actually bought it for. But every year you actually get a statement, and you can always request for your statement basically, and that will tell you what the value was at the time that you bought it and what the current value is now. In Europe, all your 212 trading 212 as well tells you what your portfolio was when you initially bought it and what the portfolio is actually worth as at today. So it's always in those apps, and that's why I always recommend those apps, because it actually shows you kind of like all of that information. Does that answer your question? Does that answer your question? All right then. So let's see. I'm trying to navigate. I'm trying to make it as so we've talked about Nigeria. We've talked about, so the next thing we are going to do is, if you want to start your journey today, let's start with those of you in Europe. Let's start with €100 per month. Okay, what can you guys see? Please tell me you can see my €100 per month.
Yes.
Okay, cool, thanks. So if you have €100 per month to start, right? And then after this, I'm going to show the Nigerian one. The Nigerian one I've set at 5,000 naira. But what I'm going to do is, after this, I'm just going to open up the Excel sheet, and we can kind of see how it actually grows over the next 10 years. And I'll play around with the amounts that you're putting in monthly, and you can see kind of like where you end at the end of the next 20 years and stuff. So in terms of, if you have €100 per month and you can put it on auto, all the apps that are out there, both in Nigeria, UK, Ireland, allows you to automate it. So if you get paid, let's say on the 20th of the month, I'll be advising set up an automation so that the €100 or the 1,000 naira goes in every single month, and then you can allocate it. You can also do auto allocation as well within a lot of those apps. So if you have €100 per month, and I think we already touched on this, is like I said, if you're just starting, especially 60% growth stocks, 30% dividend stocks, 10% S&P 500 basically. Monthly investment, I said €60 into Vanguard. Why? Strong exposure to AI, the technology leaders, innovation focused companies, the ones that I like most in my life: Apple, Microsoft, Nvidia basically. I think I've said this so many times today. Then €30 goes into your dividend stocks. It generates income. They will pay you income, like you see it coming through every month or every quarter, depending on how often they pay dividends. So you have in Schwab dividends, you have things like Coca-Cola, PepsiCo, Cisco. Now it doesn't have to be €100. You can start with €20 a month. You can start with €50 a month. You can start with even €10 a month if I just want to dip your feet inside the water. But please don't leave here today and don't do anything. Start somewhere, and then put €10 into your S&P 500. Now your S&P 500 is one of the safest ones. So for some of us, when we're starting, you might want to put your whole €100 into your S&P 500 for the next 1 year, so that every month that's where your money is going into, and then put less money in the other ones. And then as you get comfortable, you can begin to switch it around. Because one of the things that you can also do is, it's not where you start that you actually finish. You always have to go in, check what's going on, and then you can reallocate your funds as you kind of like want to, basically. So and this kind of like gives you this is what I call a medium risk portfolio. And why is it medium risk? There's a higher return potential, stability and passive income. It's already fully diversified, and then it reduces your timing risk, basically. So what am I saying is that I am telling you that don't leave here today without making up your mind to say, okay, I can invest €10 per month. I can invest €20 per month. I can invest €50 per month. A lot of us can kind of like afford it if we really, really look into it. I can invest €100 per month. And for those of you, my rich friends, please, if you're very rich, you can do €1,000 per month. But if you can pay €1,000 per month, please give me the 10% tithe so I can be putting €100 per month in my own portfolio, basically. And you can do that every single month for the next 20 years. If you did every single month for the next 20 years, at the end of 20 years, your portfolio will be worth €50,000 plus, especially if you reinvest the interest, basically. So I'm going to open up an Excel sheet after this, and then we can kind of like play around with the Excel sheet, and everybody can tell me how much they kind of like want to put into. And like I said, future upgrade strategy for my rich aunties. You can put €5,000 per month, and you can actually decide, okay, you know what, I'm going to do €100 per month, but in 6 months time, because I have excess cash, I'm going to put an additional 1,000 as a one-off, basically. and then you can always consider adding as you begin to see your portfolio to kind of like grow, basically. And I put that there as a one-off, as a future strategy, basically. So if you have 100 euro per month to start, you can start with 10 euro, 20 euro, and I've given you kind of like the apps where you can start. You can do it as auto, and I've given you a split that you can actually use. So when you're walking away from here today, looking at all your questions, it's no longer I don't know where to start. It's no longer I don't know which ones to start with. It's no longer I'm scared, because I've told you use the money that you used to buy takeaway in a month and start your investment journey, basically. So basically all your excuses, you don't have any excuse, basically, because we've basically gone through all of your excuses today. So moving on quickly, because I'm looking at the time. Because I'm looking at the time, because I want to get to my Excel sheet. Let me see. Nigeria at 5,000, but like I said, you can decide that you want to do less than 5,000, or you want to do, what can you see? Can you see beginner Nigerian?
Yes, we can.
Okay, so I said start with 5,000 naira. I said diversify across 7 stocks, 4 sectors, 7 to 10 years horizon, basically. So I said put 40% in your banking dividend stock, which is like 2,000 naira. Put 30% in your growth stock, which is 1,500 naira. Put 20%, which is 1,000 naira, in your stable consumer stocks, and then put 10% into what we call your industrial stocks, basically. So why banking dividend stocks? Because they always pay, banks always pay dividends, to be honest with you. So Zenith, GTCO. So if I were you, I'll be betting my money on places like Zenith, GTCO, and also Access. They pay up to 8 to 12% per year on dividend. So when I was saying that, okay, if you want to be getting a certain amount monthly, you can actually use this. But notice that with banks, they only pay at the end of the year. They only pay once a year. So that money would only be coming to you once a year, basically. But then they paid, what month are we in? We're in May. I think they paid, did they pay in May or pay in April? Yeah. I think they paid in April. Yeah, I think they all paid in April. MTN2 paid in April. So you know that that money is coming to you in April, and you can basically use it to do something in April, basically. So, and then put 30% in Presco. So that's like 750 naira, and 750 in Okomo oil as well. And then put in 500 at MTN, and then in Nesto. The thing with MTN is at a point where I'm not sure how much they're going to grow again. So they've gotten to that point where you might not see why some people have enjoyed 380% or 800% in the MTN stock. People that are coming in now might not see that amount of growth, but they're also very stable. The only thing that can happen to MTN is if their license gets revoked, which, touch wood, hopefully that doesn't happen. Yeah, so, and then industrial stock like Boa Cement. I actually think that you can actually take a bet on Boa, because when it comes to cement, Dangote Cement, Boa Cement, Nigeria, we are forever building. And over the last couple of years, they've grown by 200%. So it's up to you. You can choose to move your money around the way you want to move your money around. Is really, really up to you. But these are some of the safe bets, really. And then put it on auto, so that every month that money, it goes into there. All this cheap 2,000 to watch Z World, maybe that 2,000 should begin to go into buying investments and buying stocks, basically. Any questions before we move on? And for those of you, when Tino asked a question, she was talking about the fact that Dangote was going to IPO for his refinery. So this is the time for you people to start saving money, for those of you in Nigeria, so that you can take advantage of it when it happens, basically. Cool. Now, the last thing I wanted to get through before we...
There's a question from the comment section.
What's the question?
Julina is asking if we actually need a bank agent to monitor our stock.
You don't need a bank agent, because you can always use your app. So on your app, so let me even go to that before we come to the... No, actually, no, let's do the calculator first. And then I'll come to my first, what was supposed to be my first slide. And then it kind of tells you the different kind of apps that you can use. The information is in your app when you go into your apps, basically. So you don't need, as long as you have the details to log into your app, you see everything in your app. You don't need a bank agent. You can do everything via the app. You just need to download the app and you can start your journey. It's kind of like opening like a banking app. That's what I'm saying. Technology has gotten to a place where we don't have excuses anymore because you don't really need a broker. You can do everything via your app, especially if you're not investing a lot of money. However, if you have a lot of money to invest, that's maybe when you now begin to say, okay, I kind of like need a broker. So let's start with this one. My zoom. Sorry. Share. Hold on. Where's my Excel sheets? Excel is always harder to share. Okay. Can you see my Excel sheet? Please say yes.
Yes, I can.
Okay. So this will also be shared after the class. So how it works, I've put a few comments here. So we're starting with €100 per month. We are splitting it between 60% growth, 30% dividends, 10% and broad market, monthly contributions times 12, dividend estimates, growth estimates, and then I'm assuming you're reinvesting your dividends basically. So if we come here, this is what I use for the assumed growth is over the last 10 years, what has been the average growth. So the average growth on the Vanguard one has been 8%. The average growth on SCHD has been kind of like 4%. The average growth on my what do you call it, S&P has been around 6%. To be honest, it's been around 8%, but for conservative I said 6%. And then these are the dividend yields or dividends that they've paid over the last 10 years as well, in terms of how much they pay out in dividends per year. So if you come here, this is a 10-year projection. So let's say we are here, so we're putting €100 for a 10-year period, and this is how we've kind of like allocated it. So in year one, because we're doing 100, remember we're doing €100 per month. €100 per month is what? Sorry, here's my assumptions. €100 per month, yeah, and then 12 times assumptions, which is, where's my 13? Oh yeah, which is here, because we're only putting €60 in your growth one, so that's 720 in a year, right? At the end of year 10, you have put in 7,200. Your portfolio, for those of you in euros, your portfolio is now worth what? Right? 11,718, basically. This is the dividend that you've kind of like gotten over the years as well. Now, if we come to the end, which is kind of like your total portfolio, this is how much your total portfolio is actually worth at the end of 10 years by doing 1,200 a year. Sorry. That's 12,000, yeah. So at the end of that 10 years, your portfolio is worth about 18,000, but also you've also received dividends. Now, the truth about it is this, it might look small, but a lot of us in a year, we can't account for what we did with 1,200 in a year. Myself included, even till now. So whether we like it or not, in a year, a lot of us can't account for what we did with a lot of money. So even if the money was sitting down there, that money would be doing something to your life, basically. So if we change it, let's say, what should we use? Let's say we change this to 500 per month. Your 10-year projection, 94,000. at the end of 10 years. And if we say, okay, let's change this to, let's say, 600 per month, 113,000. Let's even see. If you want to be a millionaire at the end of, I know this is a stretch for some people, but you don't know. Some people have money. But then this is taking a very conservative approach as well, in terms of your portfolio is only growing by this. So let's say I change this to, let's say, portfolio, assume growth is 20%, 20%, 20%. That's 832,000 at the end of 10 years. So let me even start from where we started from, at 100. That's 50,000, almost 50,000 at the end of 10 years that you would have sitting down. So, but like I said, I took a very, very conservative approach. Any questions?
I have another question.
Yeah, go on.
Okay, so just based on these, because I've had some people ask this question, the relationship between real estate and stock. So, for example, we're looking at a 10-year projection for investments.
Yeah.
So, if you want to compare it to, let's say, buying a property, I'll pay a mortgage for 10 years to pay off the mortgage at the end of 10 years. Which is the better option, the property or investing in stocks? So, like say you are investing 2,000 per month in stocks, and rather than that, you are using it to pay off your mortgage 2,000 per month. At the end of 10 years, which one do you think is the better option?
You know, it depends, right? So I'll put it this way, right? We all know that real estate in any country, right, increases in value. So far, so good. Do you understand? So depending on what the appreciation is going to be on that real estate, and you never can tell, depends on the area. You know, there are a lot of factors that come into play when it comes to real estate appreciation as well, right? So there's how much has real estate appreciated in that area over the last couple of years. At what point did you buy? Because at the point that you buy as well is also very, very important. Does that make sense? Now, even in the choice areas in London, some of the areas that we say real estate, and stuff like that, we found out that over the last couple of years, they haven't actually increased in value. Actually, they've decreased in value. However, the growing areas, do you understand, are increasing in value. I don't know if that makes sense. So if you're doing real estate, you have to be sure that you're entering at the right time, you're buying at the right price. So for example, if we use Ireland as an example, I remember Adamstown. When Adamstown was at its peak, when it was first built, it was going for 595k. Do you understand? I know somebody that bought at 595k, but I also know somebody that bought in that same Adamstown during the credit crush, and she bought for 280k.
Recession.
Yeah, the recession, she bought for 280k. Do you understand? Same estate, different time. However, because of the appreciation in housing at the moment, it has gone up. So the person that bought it at 280k probably has an equity of almost 300k or 400k on their house right now. Do you understand? The person that bought it at 5 something, remember during the recession, they lost value on the house.
Yeah.
So now the house has only appreciated to the value that they actually bought the house, because they bought during the high.
Yeah.
So
in essence, it means the stock always bounce back better than the real estate.
It depends.
The stock market was actually down at that time.
At that time as well, but it's also bounced back. But the same thing with real estate as well. But it just depends at what price did you buy it. Do you understand? Depends on what price that you bought as well. Because I know in the past, right, and I always say this thing, people used to buy one house and buy one other property because they wanted to use it as their pension, so that when they retire, they would sell off the house and then live off that money. Do you understand?
Yeah.
But like every other thing, depends on. So imagine somebody that retired during the cash crunch. Depending on what time, at what point they bought their house. However, if somebody's retiring now, do you understand? So like in my estate, a lot of people that bought their houses bought it newly built. Houses on my estate now, depending if you own a 4-bedroom, are going for like maybe 600k, 5 something. Do you understand? So those that bought it at the beginning, they have a lot of equity on their house. So you see all of them,
don't even have mortgage anymore.
and they don't have a mortgage anymore. So now you see them, all of them, they are building extension, building this, building that. Do you understand? And I remember my neighbor, he sold because his mom, who was in her 90s, was I think died. So he was moving, and the house was built to him. So he was moving into his mother's house. Do you understand? And then he sold. But I remember he sold it for over $500,000. But he was even one of the first buyers because it's quite old as well. So that worked in his favor because of timing.
Absolutely.
But it's like any investment, you need to know when to buy, when to sell, and when to hold. I am a fan of real estate when you're buying in a newly developed area that is just developing. Do you understand? And then you know that the appreciation, there's a lot that is going to appreciate. You understand what I mean? So I know you live in Dublin. So for those that bought commuter towns, when commuter towns were still cheap, and now commuter towns have really appreciated.
Absolutely.
But don't go and buy real estate that is already at its peak. Unless you're only using it to tie money down.
Thank you so much.
Okay. So where were we? What time is it? Okay. I was going to show. Okay, stop share. Nigerians how to. Okay, let's see. So if we do, where's my Excel sheets? Excel sheets. 10 years. I thought I had a Nigerian one. Excel sheet. Yes, I do. Let's quickly show that, and then I'll come back to the app question, because I know a few people are asking me the app question. I was going to leave that to the end. Okay. Can you see my Excel sheet?
Yes.
Okay, so if we start with 5,000 naira, and then, like I said, is in this PowerPoint as well. Split it this way. So banking, Zenith, GTCO, Presco, MTN, and you can put all your money in Zenith Bank if you want to, if that's what you want to, or you can put all your money in GTCO. But for the sake of diversification, which I always encourage if you're just starting, so you put 1,000 naira in Zenith, 1,000 naira in GTCO, spread the rest. This is what your looks like at the end of the day. 362k you get after 10 years by investing 5,000 naira a month, 60,000 naira a year, which for a lot of us is money that we can get without urgent 2k. So you invested 600 over the last 10 years basically, and yeah. $1.2. So your portfolio has doubled, and you can always play around and always put more basically. So this is just for you to be consistent. So I like for people to be consistent. Do an amount that you can do every single month, so you know that you're putting that money away every single month basically, and then you get into the habit. And then the more you see your portfolio go, the more you will actually be tempted to put your money in. But start from somewhere. Start with money that you can afford to lose basically. So somebody asked me what apps can they use. So before we do that, let me quickly show you something. I think this was the one thing that we were talking about. Can you still see my screen?
Yes, we can.
Okay. So in terms of returns of ETFs, so this is your Vanguard, this is your S&P. In 2016, it was 12.17%. 2017, 21.77% growth. Then it lost value in 2018, which is the crash. And then by 2019, see how much it grew, 31.37%. And then 18, 28, minus 18, it lost value in 2022. Then it was up by 26.32% in 2023, 24.98% in 2024, and in 2025 was 17.82% of a growth. So even though I've used 8% and 6%, your S&P 500 over the last 10 years has actually grown, apart from when you lost value here. And even if you lost 18.8%, if you had money in it, then you still had a net average of 10% between 2021 and 2022, basically. So if we do an average over the last 10 years, what has it been? %, yearly, basically, on average. Yeah, 15. So even though I used 8% in my calculation, it's actually grown on average 15%. So really I should have used 15%. So you're closer to becoming a millionaire than you think. Now, to the question I was asked, which is, what apps can we use? So, you can read this in your own time. So in terms of apps, so for those of you in Europe, we have Trading 212, Revolut, eToro, Fidelity Investments. And then for those of you in Nigeria, I will beat myself if I did not put it here. Where did I put it? I'm sure I had it somewhere. Edna, help me out. I ended up with so much. Edna, did we take it out? Edna is never answering me. No, she has left me on my own.
Yeah, Ma, what are we looking for?
The apps that you can use in Nigeria. I thought I had it in one of the slides.
No, I don't think so.
I did. I think